Welcome back, and let's talk about some of the earnings candidates then. And UCO Bank is the company in focus. This time, the NIS has seen a jump of almost 20% on a YOY basis, while the profit has also seen a growth of 27%. So almost a good set coming in from the bank. But let's understand more from the management itself. Ashwani Kumar, MD and CEO of the bank, is joining us right now. Good morning, Mr. Kumar, and thank you so much for your time. We can definitely call it a strong quarter for the bank with your NIMs expanding, the net expenses does remain low, and that has been aiding your growth. But the cost of funds overall has also seen decline. But what changes led to the lower cost of fund this quarter, and will this sustain? Give us a sense over there.
Our net interest margin and our cost of funds have improved in this quarter. What we have done is that we have concentrated more on CASA, quality customer acquisition through CASA, current account and saving account. We have tied up with certain institutions for opening saving accounts. You can see that our CASA ratio continues to be around 37 to 38%, which we have given a guidance at the start of the year. We have not dipped below 37 at all. Even this current quarter also, we are nearing 38%. That is one. Number two, we have been regularly monitoring our cost of deposit, where we need to raise deposit. We have tried to reduce our dependence on the bulk deposit, and whenever there is an opportune time, that time we are going for raising the bulk deposits. So that these are the two things where we did well. Along with the third thing which we started doing was that repricing of our loan portfolio also. Certain loans we have repriced, and where we have, as a result, we have improved our yield of advances also.
Morning, Mr. Kumar. This is Snehi also joining in. Now, the growth and profitability was also aided by higher recoveries and low cost to income. You have already reached that 2,700 crore mark of recoveries out of the 3,000 crore that you had guided earlier. Tell us, will the recovery momentum remain strong going ahead in Q4 as well?
See, in Q3, we had, at the start of the year, we had projected total recovery of around 3,000 crore, against which we have recovered 4,700 crore. Our projection was basis that equally we will have around 500 to 600 or 700 crore of recovery in every quarter. But in third quarter, our recovery momentum was strong because certain recoveries which we were expecting in Q4, they came in Q3. So we will, basis the current trend, we are going to exceed our guidance of 3,000 crore of recovery in this financial year.
Right, Mr. Kumar, but could you also quantify the kind of recovery rate that you're expecting for Q4?
Recovery, I think the fourth quarter we may be exceeding more than 500 to 700 crore.
All right, and let's talk about your CD ratio then, because that is now at 75%, as the overall deposit growth was in the single digit. But when I look at the past quarter, it has always been subdued to the loan book growth. With CD being at 75%, how are you planning to bring the deposit growth, and can it become a constraint to your loan growth?
See, at the start of the year, we have given a guidance that we will be raising deposit in the range of 8 to 10%. We are within that guidance which we have given at the start of the year. Similarly, another guidance which we gave, that we intend to increase our CD ratio to 75%. So now we are already around 74 to 70, in between 74 and 75%. So now our focus will continue on the deposit front also. If you see our deposit for the last 3 quarters, they are in a growing trend. In the second quarter, it was around 5.5%, and then 10%, 10 plus percent. Now say 9.5%. So the focus on the deposit will now continue in this next quarter and thereafter. So there will not be any constraint on the credit growth. There are two counts. One, we are having access SLR securities also. Whenever we need funds, we can use those securities also to fund our credit needs.
All right, Mr. Kumar, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us.